Hey traders, what is going on? It is Simon the trader here. Look, I know it's been a long time since I made a video, but I just wanted to come out with an update as I think we're seeing some opportunities to get into the markets here, especially with some of the price action we've seen recently in the stock market. Notably, high momentum has seen some massive swings, primarily to the downside. And I do think we could be at a turning point for momentum stocks. And obviously, within this, I would include sectors such as memory, sectors such as semiconductors. These areas are really starting to look pretty appealing. Certain stocks have fallen over 50% from their highs a couple of months ago. So I'm going to get into it this in this video. I'm back into it with the content. So if you are here, if you are watching for the first time, or if you are a subscriber that has just seen a video come up from me and I haven't made one in a while, please do let me know in the comments what you're interested in hearing about, and hopefully this will provide some value to you. So let's jump straight in. So here we've got the index of the Nasdaq, and as you will see, we had this massive bullish engulfing candle last Thursday, and we were able to importantly hold on to those gains going into Friday. So this is really what I wanted to see as somebody that is turning bullish here on the market. I did manage to get some buys in here. We cut straight through the 100-day moving average, but we're back above it right now. So that's an encouraging sign. Importantly, we're also above the lows from June. So that is something I wanted to see. I also, if we just flip onto the weekly, we actually closed above the previous week's low at this 28282. And this is something I talked about on my X. I did a bit of a running market commentary. So you can always go to my X if you want to get more up-to-date alpha from myself. But to me, this is looking constructive. What I want to see now is for us to consolidate here, for us not to go lower than the 100-day moving average, for us to hold above that and to build a bit of market structure, and then to get a follow-through day, so a breakout next week, getting above the highs from last week that are around about this 28721. So if we can see that, then things will be looking really good. And I'm just actually going to put that on the chart. This would be the level to get through, getting through sort of Friday's high. That was also Monday's high. And then it would start to look like this is at least a local low for the market. And we also have to talk about the Korean market as well. So a lot of the volatility we've seen has actually been driven by the Korean market. And we've seen this fall now 44%. But from the low, we've actually seen a rally of 25%. And this was, I think it was about an 18% day. Yeah, 17.91% day update on Friday on the Kospi. So we're still not out of the woods yet. But if we can start to consolidate and then start to clear some of these moving averages, I've seen numerous people drawing trend lines on this chart to sort of show that we are in a downtrend. So it looks like we are on the verge of actually breaking through that trend as we speak. And if we can actually get a push today above the high from Friday on the Kospi, I think it might open a little bit lower. But if we could actually get that confirmed breakout, then we could be setting ourselves up for further upsides over the next few weeks. And obviously, this would be great for those investments in the AI sectors that I will move into soon. So, as I said, South Korea is really in full focus. It's bipolar stock market, as CNBC has called it, records a record rally. So, obviously, some massive swings, massive volatility, and yeah, it's largest one-day jump that we've seen. If we actually go on to this article here, surging 17.9% in a single day, the largest one-day gain of its history. So just remember, I just caveat this, that in bear markets, you often see the strongest rallies and the strongest up days. So This doesn't mean that we can't go lower. However, it is encouraging to see signs of this. And obviously, the Kospi is very, very memory heavy. So you've got Samsung and SK Hynix, which make up pretty much half of that index. So we will get into memory soon. But obviously, these are the key drivers that have rebounded to give us that massive gain. And really, what we'll be looking to see is whether the markets can maintain those gains and build on those gains going into the next week. We've also got to talk about earnings. We saw some massive hyperscaler earnings over the last week, and Amazon really did well. They saw Amazon Web Services grew by 36.7% year over year, and their AI and chip businesses have annual run rates north of 25 billion. So, really impressive by Amazon. At the other end of it, we saw Apple struggling. So, Apple are apparently reporting that they're going to have an issue with their memory prices. So, memory warnings and apparently Tim Cook, the CEO of Apple, is saying that the company have paid significantly more for memory this quarter and that they expect prices to further increase going forward. So we know that Apple have an issue with memory. We know that they've been trying to source memory from China and things like that. So we'll have to see how this plays out. Obviously, it's worth mentioning Microsoft as well also had some fantastic earnings, surging 15.5% on Thursday, which is its largest ever single day market value increase. So fantastic earnings for Microsoft and for Amazon, and definitely helping uh, with that reversal in the Nasdaq that we saw last week. However, the market is not without risks. Currently, we have a 30-year Treasury yield hitting highest levels since 2007 after the Federal Reserve kept rates unchanged. So we need to pay attention to that. What does this mean? It means that the cost of borrowing is getting higher, and it means that investors are seeking higher yields to buy treasuries. So, yes, the Federal Reserve's debt is getting more expensive. They're having to offer a higher rate on those bonds to get investors buying them, which is potentially a problem if this continues. And the other big risk is that oil prices rise after Iran says it attacked two tankers in the Strait of Hormuz. So it seems like there's no ending in sight for the conflict in the Middle East, and obviously it's something we're going to have to pay attention to because the oil price directly impacts inflation. It directly impacts the economy in terms of the price of everything goes up when oil is high. So we just need to keep a eye on what oil does because another large spike above $100 would almost definitely bring down the markets. But there's been some news over the weekend where Trump has said that he is not making more strikes and he's close to a very good deal, something we've heard a lot of before. But it seems to be dropping oil back a bit today in the weekend markets. So that is just something we'll have to pay attention to. And here is that weekend oil market. So as you can see on the daily chart, we are currently down nearly 7% on the day, 6.7% at the time of recording. So if we do get some follow through to the downside and we manage to break below last week's low, then this could definitely give markets a boost next week. So, in terms of the data for the week ahead, the main thing to be aware of is earnings. So, we've got some big earnings this week. On Monday, we've got Palantir, we've got some other sort of large businesses reporting SpaceX, AMD, Caterpillar, many of these names influential in the AI build out. You've got McDonald's, and then on Wednesday, you've got Eli Lilly and Novo Nordisk. So some big pharma names. You've got memory names, SanDisk and Western Digital also on Wednesday. So Wednesday's going to be a massive day. Uber, Disney, and then on Thursday, we've got more earnings releases all the way into the end of the week on Friday. So A really, really big week of earnings, and we're going to have to pay very close attention to these earnings reports as they are likely to definitely move the markets around. So, jumping into the charts and looking at some of the stocks that I'm interested in playing this week, you've got Nvidia here. Nvidia coming back into this support area around about sort of 196 to 200, and we've got the bounce. So, looking to see whether Nvidia can push on over the next week. Just going back to the weekly chart, we're looking fairly good here with this large weekly wick, and I would expect to see Nvidia now start to make its way back up to attack these new all-time highs. And obviously, this would be bullish for the rest of the AI space if Nvidia could make that move. We've got Broadcom as well, similar looking chart. It's come down, it's tested support around about the 360 level multiple weeks. It's been able to hold that. Importantly, it's also holding its 50-week moving average. It's closed back above its 20-week moving average. So I do think that Broadcom is another one to watch this week. Obviously, these larger cap, sort of big mega cap tech companies which are heavily positioned in AI, it would be good to see strength in those, which could then filter down into the high beta names. We've got DRAM, which is the memory ETF. So this DRAM ETF really composes of Micron, Samsung, and SK Hynix, those three big memory names. And like I say, we will really have to see what happens with Kospi and South Korea to see if that market can get the breakout and can resume some upside momentum. That will definitely help and have a knock-on effect to this DRAM ETF. And another one I'm looking at is Soxal. So this is the Direction Daily Semiconductor 3x long ETF. So you can see we've come down, we've nearly tagged that 50-week MA, but we've come right into a pocket of support. If we look at the daily chart, you can see it here. We've come into the 200-day moving average, into that support block, and it looks like we have a chance here at reversing, but I'd really want to see us get back above the 100 MA on the daily to actually confirm that we have got a local low in. So remember, this is very volatile. This swings around a lot, but I think any pushes back down towards the 100 mark and this 200-day moving average, I'd want to see buyers come in and defend that and step in and look to make a higher low on this chart. So this is one I would be potentially interested in picking up if we did come off a little bit more and get a nice sort of bullish reversal off that. So I'll be watching this one quite closely. And there's just a lot of good setups within the AI space. You can see Marvell has come below its 100-day moving average. It started to recover on a weekly chart. It's back into its 20-week moving average. It's basically closed at that. So let's see if we can push off this support going into the next week. We've got TSM as well, similar setup to Marvell, into its 20-week moving average, starting to find some support. Seen a reversal last week, and it's back above its 100-day. So again, we're coming into some resistance here around this cluster of the 50-day and the 20-day moving average. If we can get above those, then I would be a lot more confident in the semiconductor space. And another one we've really got to talk about is Bloom Energy. So this had absolutely blowout monster earnings. We saw a huge bounce in Bloom. It was up a good 47%, and it's come right into this underside resistance, which was the June lows. So what I'd really be looking for Bloom to do is consolidate here to launch another attack at this underside resistance, this sort of 2, 3, 4 level, which also lines up with the 100-day moving average. And if we could get above those resistance levels, then I think Bloom could be one to shine and run back to new all-time highs fairly quickly. And finally, we need to talk about the data centers as well. Here we've got Nebius, and you can see we came all the way down, almost touching our 200-day moving average on a weekly chart. We didn't quite get down to the 50 week. However, we did get very, very close to back testing previous all-time highs. I like the fact that that got slightly front run. I think that's always a bullish sign when support gets front run. And we are back above the 100 moving average. So we're seeing a bit of relative strength in Nibis. I would say for us to get really bullish, we want to get above this 50-day moving average. Obviously, that's where we found resistance on the last bounce attempt. And if we're able to get above there, then this could definitely run back to new all-time highs very quickly. This would obviously be a bullish development for the whole AI space. So you can see there is still work to do on some of these AI charts, but the setups are there. The ball is currently in the ball's court, and it is really on them to prove themselves and to be able to hold these support levels and really start to push these markets back higher again. So I'm going to leave it there. Thank you very much for watching. Just to summarize, we are still not out of the woods yet. We still have the tensions in the Middle East with Iran. Even though Trump's been talking about a deal, we've seen those talks go back and forth. Trump says they're on, Iran says they're off, etc. So that could continue for some time. We've also got the long end of the yield curve really starting to spike with that 30-year yield jumping to new recent highs. So we're definitely not without risks that are out there on the table. But there is that great saying that bull markets love to climb the wall of worry, and we definitely have a lot of worried people. We've got retail that are dumping stocks right now, and I personally feel that it is probably about time after the big sell-offs and the big markdowns we've seen in some of the memory names and the semiconductor names that we see momentum resume with its strength and start to lead the market higher. So we've just got to pay attention to the price action over the next few days. This is going to be a massive week. Obviously, big earnings still to come out. Everything's in the balance. We're starting to get really wedged in on the charts between support and resistance here. And we will have to see, can the bulls get the breakouts this week? And can we see that follow through to the upside? And we can start to resume some nice uptrends. I personally think that can happen. But of course, we will take each day as it comes. And if you want to get my up-to-date analysis and views, don't forget to follow me on my X account, because that is where I make my daily posts. Obviously, it's my first video back in a while. I do promise these will get slicker, but I'm looking to get back into the habit and back into the routine of doing a couple of videos a week. So I'll try and do a midweek update as well. And with that said, talk to you all on the next one. Bye for now.